Hi, my name is Sam Patel, and I would like to take you through Brookfield Renewable Energy Partners, one of the largest renewable energy production companies in the world. So, a quick overview of Brookfield Renewable Energy Partners. Wow, that is a mouthful. We're just going to call them BREP. So, BREP's assets date back nearly 120 years ago when William Mackenzie and Frederick Pierce opened Sao Paulo Tramway Light and Power Company in Brazil. By 1916, they opened up one more location in Rio de Janeiro and one location in their home country, Canada, in Ontario. Their Ontario branch was called the Great Lakes Group. Over the next 120 years, through a series of restructures and acquisitions, by 2009, they were announced to be Brookfield Renewable Energy Partners, which was solidified in 2011 as a subsidiary of Brookfield Asset Management Incorporated. So just a quick highlight of the big events in those 120 years was when Brazilian Light and Power Company, a consolidated version of those three companies started by William and Frederick, was bought out by Edper Investments. Eventually, it was renamed to Brascan, a combination of Brazil and Canada. The next major event was in 1959 when the Canadian branch, Great Lakes Group, was split up into a brokerage firm and a power production company, which marked the era of asset management becoming an integral part of the future Brookfield Renewable Energy Partners and the asset management company. It was finally taken over once more away from Edper Investments by Jack Cockwell, the CEO at the time, in 1993. By 2002, all of the major assets inside of previously Edper Investments were renamed to Brookfield themed. The Edper Investments became Brookfield Asset Management, and the Great Lakes Group became Brookfield Renewable Energy Partners by 2009. So throughout this 120 years, a lot of things changed with how the company ran and what their strategy was with becoming a dominant player in the current market. Back at 120 years ago, they were using a differentiation strategy where they were using innovation to create value for consumers. But by 2009, they were strictly an asset management company. For the last 60 years, that is what they had done. They did not grow Brascan as much as expected, while they did grow their asset management departments vastly. So BREP became a pure play renewable energy production and transition company. Pure play renewable energy production company strictly buys existing plants and farms and infrastructure on which they will build their energy power capacity. As a pure play, all they're interested in is creating the quickest turnaround time for power plants and energy, whether it's buying existing running power plants, buying out entire utility companies and countries, or buying out the infrastructure in which electricity is transmitted. Their current strategy is acquiring undervalued renewable plants and farms, leveraging their asset management expertise to turn them around. Due to their huge reputation and their long-term uh, investments in financial investments, they're able to identify cheap, undervalued plants all around the world and uh, create risk portfolios that will allow them to plan for their future, giving them a little bit more foresight than the average renewable energy company. A similar company that does exactly what REP is doing, but on a smaller scale, is BlackRock. Uh, BlackRock Investment is a pure play renewable energy production company as well. One of their assets uh, acts just like BREP, however, they are just a teensy weensy bit smaller. So their company is structured as a global company due to their centralized upper management in Toronto, Canada, and then having multiple renewable energy plants across the world in 15 different countries, 24 different markets, with market capitalization of nearly $30 billion as of 2022. Some major problems that would be faced by BREP due to the fact that they are humongous and they are a renewable energy company are the climate variations, their strict purchase price allocation agreements, the fact that they do not have a strong R&D department, and the risk involved with multiple acquisitions. So the first problem it has been addressed through diversification. BREP has diversified their energy production into solar, into wind, biomass, hydroelectric, and through BAM, their holding company, they are now affiliated with petroleum companies and nuclear companies. Having all these different energy production capabilities allows for more reliability when some days aren't that sunny or some days aren't that windy. Instead of having to buy more expensive power from a competitor, having having your own reliable energy source can make up for these laps in judgment. In fact, this is the strategy that the Netherlands uses to maintain their power throughout the year. 70% of their energy comes from renewable resource, from renewable energy, specifically wind power. But 30% still comes from natural gas because they are put on reserve in case enough electricity isn't being created. And some days, the Netherlands creates too much energy, and they are able to sell and redirect that energy into the greater European market. And that is the basic philosophy that BREP is using with all of their diverse energy production means. They stay reliable. They have multiple different options on how to get energy. So the second problem that's not a problem is the strict purchase price allocation agreement. So a PPA essentially sets a strike price, a fixed price in which the consumer and the buyer, the seller and the buyer, have to stick to for a given period of time. So regardless of what the market price for energy is, the agreed upon price from the PPA is what will always be paid from the buyer to the seller. The reason why PPAs are popular in the renewable energy sector is that they allow for new uh, companies to enter markets with renewable resources. Because of the previous problem, it is difficult to ascertain your expected energy production. So it is important to know that regardless of where the economy turns to and how much energy you make, you will have a reliable uh, source of income throughout your uh, time running that renewable energy plant. What this really does is it promotes competition. And that is not good for BREP because BREP's whole shtick is just uh, buying out these smaller plants and then refurbishing them if they're not efficient enough, or just giving them a political push where they may need one. While the PPAs are good uh, for investment as a whole into renewable, uh, in the short term, they are bad for BREP in that they increase the decentralization of renewable resources. However, due to the amount of investment BREP has put into renewables, they can capture some uh, extra return as energy prices start to go down on any of their indefinite PPAs that they currently have. Many of their indefinite PPAs are with Brazil. So as the cost of energy goes down in Brazil, they will just be continuously raking in that fixed amount, even though it's above the market price. So they just got to hang in there. So the third problem is BREP does not have a well-established research and development department. Not having a good R&D department isn't great, especially if you're a large company, where if you want to pivot into a more efficient technology or you want to implement a new production system, trying to change the entire company due to it being nearly 100, nearly 200 company or 200 plant strong is a great feat that will cost a lot of time and a lot of money. And at the rate of innovation for renewable resources, by the time they implement the new technology, a more efficient technology is likely to be already out. So that is one of their problems that they'll face. I think that the way that they will solve this problem is by uh, simply using their large market share, their large global market share, to increase their bargaining power with innovative companies where they are creating innovation specifically for BREP. That way, they can get all the advantages of an R&D department without any of the risk associated with not innovating. Plus, they are not good at innovating, so it doesn't make sense for BREP to do something they're not good at, which goes into what they are good at, which is asset management and political affiliations, which can absolutely allow them to slow down R&D from coming out through lobbying against activism, which while might be unethical, is not something that BREP hasn't done before. One of their partners, in fact, not their partners, one of their competitors, in fact, Next Era Energy has been lobbying against consumer grade, consumer accepted regions for renewable resources, or for solar panels, since the early 2000s. And it won't surprise me if BREP also follows suit like NextEra. So their fourth problem is overlooking risks of the amount of mergers and acquisitions. So everybody knows what a black swan event is. It's when there's an unknown that causes a disaster. And having the amount of mergers and acquisitions that they have conducted in the last 20 years is uh, is a ripe uh, equation for these black swan events. Since 1999, Brookfield uh, had only 12 hydroelectric dams. They increased their plant amount by nearly 180 plants in 3 different energy production industries that they had not been in before. So there is a huge issue for any acquisitions not to go through well, or the production to be reduced after acquisition occurs. Those are things that the company has to look out for, or at least hedge against, where when they find investments, they hedge for the amount of acquisitions that will go under. And I think they have been doing that pretty well since. They're able to sell off certain assets. In 2019, in fact, they had nearly 84 hydroelectric plants, and by 2021, they only had 21 hydroelectric plants in North America, or not 21, sorry, 71 hydroelectric plants in North America. It shows that they are actually putting things offline, which means not all their acquisitions are going through. But their expertise in mergers and acquisitions and assets does help them out overall, being a leader in asset management. Another mitigation for this overlooked financial risk is the financial backing they have from their holding company, uh, BAM, BAM. So BAM has nearly $690 billion worth of assets that it manages. And I would be hard pressed to say that they would not be able to raise uh, a few $1 billion to bail out this renewable resource company, renewable production company. Not just because they like it, it's because ever since 2018 came around, renewable energy became more cost efficient. So they not only have the motivation to dip into their capital in case they have to ride out a bad economic storm or conditions on all of their investments and acquisitions. They certainly can last longer than many other renewable production companies that may try to enter the market. So the implications of unpredictable issues that may face BREP in the coming future. Potentially a financial blowup due to multiple human rights violations, according to a benchmark test by the Business and Human Rights Center, a organization trusted by the UN for investigating human rights allegations. According to their latest benchmark test in 2021, they listed BlackRock and Brookfield as the worst human rights companies in the renewable energy production market. Uh, this negative goodwill, bad will, if you may, can certainly impact their ability to get funding from governments. Maybe not from their investors, but definitely from governments. I think the way that they'll handle these allegations are one, to completely outright and deny it, like their CEO has done, and two, to lobby against these human rights violation activists, and to uh, have hedge for any settlements uh, that may come up in the next few decades while running BREP. While unethical, that is not a unheard of action by a billion-dollar company. In fact, their competitors, Next Era, do this regularly when they lobby uh, against renewables becoming zoned for residential communities, and whenever a uh, whenever any class action lawsuits occur with their workers, they usually just draw out the settlement until the damages are less, or the settlement is less than the damages, which is a pretty common practice among billion-dollar companies. Second implication is innovation. So a major factor in the renewable energy space is the speed of innovation. As the innovation of fossil fuels begins to, uh, not begins to, has been stagnating, um, their innovation curve is at the end, is flattening near the end. And the renewable energy innovation curve is smack dab right in the middle during that exponential period. And with the recent investments by European nations, China, India, Japan, and recently America, uh, this exponential innovation uh, position, or exponential innovation position that renewable energies are in right now, are only going to further uh, be exacerbated. I do not doubt that rapid innovation will occur within the next 10 years that could allow uh, near utility grade renewable energy production in your neighborhood, which will reduce transmission costs and will leave a lot of BREP's assets stranded outside of the energy market that has become decentralized. The way that they're combating it right now is, again, lobbying against renewable energy zones for residential areas, um, just like Next Energy is doing, and being part of super PACs that promote the centralization of renewable energies. While uh, these actions can only last for so long until uh, the governments change hands and they no longer have sway on politicians, or at least they have less sway, they will still have to do something with these uh, dead assets, these stranded assets, like the hydroelectric dams that are strictly centralized, which would become way more expensive than having a local solar panel farm. Based on the way that, based on different uses of these energy in Texas, for example, I do think that these hydroelectric dams can still be used, and I do believe that Brookfield will likely repurpose any of these stranded energy assets into hubs for cryptocurrency to flourish. While it does produce a larger carbon footprint, uh, depending on the area, and especially since a lot of hydroelectric dams that are owned by BREP are in Canada and in Brazil, having a uh, having higher carbon emissions in those highly dense forested areas might actually be a positive thing, while also keeping the entire uh, facility cool. I think there is a lot of potential even after uh, decentralization occurs, and BREP may not be holding the bag after all. And then the last thing is the clear uh, global investment uh, that many companies are engaging in, especially the US with their $550 billion clean energy subsidy that they approved this last year. This is going to encourage a lot of new renewable energy companies to start taking some market share. And this may be more competition than BREP can deal with, considering they're only a $30 billion market cap company, and the renewable industry, the renewable energy sector, is likely to increase from last year $70 billion to uh, this year near $1 trillion with this $550 billion investment by the US. And all of this money will attract so many flies, so many small renewable energy companies, and it'll be incredibly important to have good relationships with the government and also be aware of potentially super innovative small companies that come out in the next 5 to 10 years. So they can be snatched up as soon as they are ripe uh, for BREP. That is primarily what they do. They wait for uh, potentially undervalued companies, which there will be plenty of due to this honey in the renewable market. And I think they'll just keep their ears close to the ground as a plan of action. Analysis of BREP market and their position. So the energy market is growing tremendously. I didn't put a number there because I have received, when I was researching, I had multiple different answers from multiple different sources. Uh, some of them were reputable, some weren't reputable, uh, but they all came up with different numbers. Some say that it will be $1 trillion by the end of this year. It'll be more than $2 trillion by the end of 2023. By 2026, it'll be 3 to 5 trillion, and by 2030, it will reach nearly $10 trillion. And all these numbers are, in my opinion, outrageous considering the current size of the energy market does not exceed $3 trillion to this day, including oil and gas. So I think it's important to be skeptical at the market growth being that high, but I do not believe it's impossible due to the latest investment in renewables by the US government through their Build Back Better Act. But that will not happen every year. That will happen this year, and likely not next year. So this is a year to start a renewable energy company. Um, So the market is hot, but I don't think it will be hot for very long due to the reluctance of a lot of government entities. The next major global sentiment around renewable energies is the Paris Accord, uh, putting net zero at the top of global priorities, bringing attention towards global warming, having a lot of companies take initiative towards net zero, and having the world look at renewables as a potential option allows BREP to find new investors in foreign markets and uh, be a catalyst to their global transition from from a large North American and South American uh, energy company to a large global company. They have dipped their waters in China and India over the last 5 years, and they uh, have got into Europe just in the last 3 years. And having global recognition on top of a large access to investment, it is a great environment for BREP to position themselves as a market leader, uh, especially in especially a cost leader because of their size and their ability to bargain. Their history with asset management and financial planning will only uh, help them in this exponential growth period for renewable energy because a lot of small businesses will start to crop up that will be definitely seen as investments for these larger companies. They have been doing mergers and acquisitions at a increasing rate since 2000 and have no intention of stopping. So they are positioned great, even if they do not receive a bunch of funding from the government. So analysis of their current strategy. It looks like their competitive strategy is a mix of risk and cost leadership. The fact that they've diversified their energy production allows them to mitigate a lot of risk from one renewable to the other, on top of having very reliable sources of energy, like petroleum in Brazil, and now having access to manufacturing nuclear power plants with the purchase of Westinghouse Electric. They are they're making very risky investments, but uh, they will all support this cost leadership aspect of their wide breadth and large market share that allows them to bargain down uh, and get the best fixed rates for their PPAs and the best deals with any innovative companies on restructuring a nearby or a local plant. With their reputation and long history in the financial market, I do not doubt that they can find plenty of capital to buy more assets, and they have an incredibly strong legal department that will cover their mistakes, and they really are just in prime position for the next decade if the funding from governments continues at the rate that it currently is. what's the future of renewables and BREP globally? BREP has been positioning itself well for the last 20 years through all the mergers and acquisitions of smaller utility companies and other non-renewable resources that provide reliability and shore up where their renewables uh, drop the ball, and in alternative clean energies like nuclear. Since 2000, they have increased their energy production from 125 megawatts to, in 2021, 25 gigawatts. Just for scale, a kilowatt is 1,000 watts, a megawatt is 1,000,000 watts, and a gigawatt is 1,000,000,000 watts. They have 20-folded their capacity, and it doesn't look like they're stopping anytime soon with the amounts of mergers and the acquisitions that they are slated to continue. In fact, in the beginning of this last year, they IPO'd their Global Transition Fund, which was seeking $12 billion to be more aggressive with mergers and acquisitions in in foreign markets like Asia, Europe, Australia. These markets are prime for new money, and since over the last 20 years, Brookfield has tested those markets out. They know what they're in for, and they are ready to be just as aggressive as they were in Brazil and Canada and America elsewhere in the world. In fact, nearly half of that, actually more than half of their $12 billion goal was reached. They raised $7 billion. The rest of the money will be financed by a self-loan from their holding company or from private investors. With this money, they want to grow to a $12 billion market cap, which is very feasible considering phasing out oil and gas, a $2.2 trillion company, is slowly on its way, on top of the fact that the renewable energy market will increase to nearly $1 trillion. Combined with those two facts, I don't see it being impossible and very feasible for a $200 billion market cap, since they currently have around 10% of the global market cap at $30 billion. So overall, their actions in the last 20 years showed that they have properly diversified their energy productions and proven that their M&A retention is feasible for growth. And in case rough weather hits them and they hit a downturn or a few investments flop, they do have a large safety net in the form of Brookfield Asset Management, which currently manages $690 billion worth of assets in real estate, energy, financial services, and entertainment, many of which can be considered complementary to their energy sectors. And it looks like they're in prime position to take on the next 10 years with great success. The risk for Brookfield management is very low and can only come through a political shift. If the politics remain relatively the same, I do not see why not BREP can hit their goals and In fact, exceed them. Thank you for listening. Have a great day.